Let's also get in Rahul Sharma here. Rahul, how are you looking at the markets, Nifty? We are seeing some bit of correction in trade today after 4 straight days of gain. Yesterday, we also tried to, or we attempted to cross the 50 DMA mark. Do you expect the uptrend that we have been seeing for the last few days to continue in the markets going forward?
Yeah, so it's been like 500, 600 points of the Nifty where we've gone up in the last 4 to 5 trading sessions, and a bit of a cooling off is something that we are seeing. We're seeing some intraday volatility as well, especially the India VIX has shot up today in anticipation of a crackdown on the Nifty. But the broader market, especially the Nifty 500 index, is indicating signs of resilience, and it could be a very small micro correction where Nifty sort of it goes down to 24,200, 150, and from there we sort of reverse. So the texture of the market is buy and dip in a small range. So 24 500 we've crossed. The next possible target for the Nifty is placed at 24,800. So at least until then the view remains positive. And in case today's dip, for example, intraday dip that we saw got bought into, the best thing to do in such kind of a market is to be stock specific. And there are both long and short setups in the market which can be traded, and the volatility can be beneficial, especially you have a long short approach in such kind of a setup.
Okay, point taken. So that's a view on Nifty. But what a recovery which we have seen from the lows of the trading session and a sudden bout of that. Let's try and understand as to what is actually driving this recovery, and just want to check some of those heavyweights to begin with. The Reliance and HDFC banks of the world, if that is what is pulling the market higher. It does actually seem like it's IT which is doing the trick, because Infosys is up 1%, TCS is holding with a gain of 1%, Reliance has moved higher by 0.6%, but you also have SBI which is doing quite well in the trading session, and all of these stocks are actually contributing to the up move on that one. Reliance, of course, is the one, and the SBI stock as well. Those heavyweights are doing quite well, and HDFC Bank seems like a case of that basket buying of sorts, wherein all of them are moving in tandem. Within these heavyweights, Rahul, if I had to ask you which is going to be the leader from the pack, which will drive the Nifty up move from here on, maybe towards 24,500 and then 25,000, is it going to be Reliance? Is it going to be HDFC, ICICI, SBI? What comes to mind?
So, the top three stocks which are contributing to Nifty's gain today are Infosys, Reliance, and TCS. These are the primary, gainers in the Nifty 50 bucket. Now, what could drive the markets higher? So, one side, we have a very strong BFSI space. So, banks are something which are looking very strong. So, we have the likes of an ICICI Bank, which is, broken out, ICICI Bank, HDFC Bank, the other one which has broken out from a long-term consolidation. So when you have breakouts happening on heavy weights like these, it is generally the index which sort of supports the market and takes it ahead. And even in today's intraday correction that we've seen, the correction has been relatively shallow in these stocks. So my sense is if Nifty has to head towards a 24,800 mark, it has to be led by banking and financials. Both of the sectors are very solidly placed. Speaking of Bank Nifty, a very good chance of me hitting 54,000, 54,500 as well, which is the previous top. And as far as the Fin Nifty is concerned, we could very well be headed towards the 25,000, 25,200 mark. So there are two areas where we feel that alpha can be generated, and these are the ones which could be leading the pack in the next 8 to 10 trading sessions.
Right. When you say bank is one that could lead the focus or lead the could generate the alpha going forward, are you more bullish when it comes to private banks or the PSU banks?
Yeah, so at this point in time, if I were a momentum seeker, I would stick with private banks. So ICICI Bank is the latest one on the block, which has given a breakout about the 1310 mark. In case I were an investor and I want to buy and hold and ride for the slightly longer duration, I would prefer PSU banks because the risk reward is relatively better over there in terms of the headroom. So it could be a blend of both, where you could pick two stocks from the private banking pack, which is HDFC and ICICI. And on the PSU banks, it could be SBI followed by Canara Bank. So these are the four names which we feel can do well technically over here. And basket is something that we would recommend at this point in time.
Okay, point taken. But Rahul, the other basket which is doing quite well is these financial market ancillaries, and we're all kind of thinking about as to what is the reason for the up move. But what's your sense on some of these stocks, BSC, CDSL, and Angel One? Would you recommend a buy even at the current levels?
Yeah, so these stocks have defied gravity. The correction was very shallow when the broader market saw a 10 to 12% kind of a correction, and now they've come back into momentum, and we feel that at least some of the names could do well. So maybe something like a CDSL, you could be looking to book profits. Something like a BSE, maybe book some of your profits because the stock has done like more than 10% in today's session. But if you have a slightly longer outlook, I think Angel One is one stock which can do well. Now, we've recommended this stock multiple times from 2600 onwards. And in fact, 3 days back, there was a fresh breakout which happened at 2900. So in the current setup, very high possibility of the stock going towards 3500. So this is one stock that can do well, along with the entire pack, where, essentially something like a CDSL is where we are recommending to book some profits.
And when it comes to DVS, sorry, not DVSL, how's DVS Laboratory looking like on charts?
Yeah, so it has been the strongest pharma, stock in the entire space, and it has continuously hit higher high, higher lows. Today is probably one of those sessions where the stock has seen a crack intraday, but I think the bigger structure of the stock is still very much intact. So around 6,000 look to be a buyer in the same. Maybe have a stop loss place at 5,800, and on the once it starts turning around, we feel that 6,500 is somewhere where you could look to expect the stock on the upside. So still a very strong buy on dip chart, which is DV Slabs.
Okay, so that's a view coming in on pharma, some of those heavyweights, the financial ancillary market. But anything else that you are spotting on the charts that you would be very bullish about, or something which is looking very, very heavy and you would recommend profits to be booked out of those?
Yeah, so the best thing to do is create a basket around the capex revival theme. So if you are an investor looking at technically best place stocks which could benefit from a possible capex revival in the next 2 to 3 months time frame, I think the top 5 stocks that come in our list. One is Larsen and Toubro, looks good for a 15-16% upside in the next 3 months. NTPC, which looks good for a 24% upside. We have Bharat Electronics, Ultratech Cement, and Siemens. So these are the 5 stocks which you can play on the long side, accumulate it as a portfolio, buy it as a basket. And we feel that the overall basket can give you kind of an 18 to 20% return over the next 3 months time frame, which is where we feel that the rate cut should be around the corner in late January or February. And eventually we feel that this is one area which could see a good upside in the time to come. So there are stocks which you can play as a capex revival theme based on technicals, but at the same time, there is a tailwind of a possibility of the capex revival actually happening on the ground.
Thank you, Rahul, for joining us and giving us your perspective about the markets.
If you like this video, then like, share and subscribe to ET Now.